So let's go back to these home builders. I mean, we've seen obviously some great numbers. You were watching lumber very closely and the run-up in prices there. I know you were comparing it to gold, but first just talk about what you're seeing in housing and lumber.
Yeah, definitely. Good to see you. So we've seen, as low rates kind of have persisted since the COVID crisis, we've seen that massive pickup in housing activity. And I think a lot of it has to do with obviously low rate refinancing, but also a lot of people leaving the cities and kind of moving out to more suburb areas. And we look at that as really with the personal incomes that have gone up a little bit, the tax or monetary infusions that were given during that COVID pandemic, we've seen that housing really be a beneficiary. And it actually was been a beneficiary with lower rates in 2019. So I think now it's just more of that tailwind manifestation of increase in housing activity. The numbers that came out earlier this week with building permits on top of the economic report this morning really point to a sustained, durable recovery. We talk about housing as one of the best barometers in the macroeconomic environment, given its multiplier effect with all the people that go in and build the homes or go in and help remodel the homes, and think about all the purchases you make when you go get a new home, a new fridge, a new couch. And so a lot of that spreads through the economy, and we look at this as a great tailwind.
Yeah, but do you think it's all going to continue? Would you buy into housing? Would you buy into things related to housing? Or do you think it stalls?
No, we believe that the tailwinds are still in place and will continue for the foreseeable future. I mean, we look at household formations. That really has been lackluster since the 2008-2009 crisis. And we still see a lot of empty nesters at home, and we see those maintaining, moving out of the city into suburbs. And then as well as, the next generation or younger generations moving into these new homes. So we think that there's still secular tailwinds that will coincide with the cyclical tailwinds that are coming in from low real interest rates.
Right. Now tell me about gold. I know you're watching gold closely. I think you're doing a comparison with lumber and gold. What's the case here?
Yeah, so I think one of the most important things that I remind investors or market participants is that really since the PMIs began inflecting in May 1st of this year, after we dialed in all that bad economic data from COVID, lumber has doubled the performance over gold. And we look at lumber again as another great macro barometer. And there are obviously supply chain issues that are going on with Canada, but also the tailwind of what's happening in housing. Lumber ends up acting as a great kind of segue into earnings expectations. So we see this increase in lumber really acting as a good barometer of what's going on in economic activity. So while everyone talks about gold as, that safe haven currency, the dollar debasement has also really fueled other industrial commodity asset prices. And we believe that there's not enough focus on that, where investors are missing out on a good opportunity in having exposure to copper or lumber or steel.
So do you think that gold, for example, could continue to go higher, but that lumber will just be twice that? I mean, or do they go in opposite directions going forward?
So that's a great question. We actually believe that gold has really had its great run and rally, and we've really kind of recommended taking exposure away from the gold sector and gold miners in particular. Just as the economic recovery begins to really manifest, we see assets rotating out of those defensive names, gold in particular, given its historic run, into more industrial-based commodities. Again, lumber, steel, copper.
Oh, I see. That makes sense. Yeah. And last but not least, when you look at the economic data, I mean, we've gotten in even some, the PMI flash numbers, we've gotten in home numbers. What are you looking forward to going forward to make some decisions on investing? Do you buy the S&P 500? Do you buy the NASDAQ? What economic indicators are you looking for? And then what will you do?
Yeah, so we think right now that 10-year yields are pretty anchored and very low, but we expect with the new PMI data, the housing numbers, the increased industrial prices will really kind of lead way to higher inflation. So we expect real interest rates to continue to move higher. And with that move higher, we expect to see cyclicality to start outperforming. So value, financials, industrials, materials. In fact, one of the great tidbits, wrote these numbers down here, is that the equal weighted industrials and materials sectors have outperformed the S&P 500 equal weight index since May 1st. We believe that's going to continue as the economy still gets on its footing, and this is a brand new renewed business cycle. So we encourage investors to barbell with the tech that's done phenomenally well, but really start looking for durable opportunities to place capital into the beaten up sectors such as industrials, materials, financials, and energy, as we think that will continue to outperform over the next year, 12 to 16 months.